Hello, everybody. Welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'm a senior account manager with the company. I'll be presenting. Before we get going, let's do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Thank you. I can see we're up and running fine. If anyone has any issues as we go along, please feel free to let me know. Some great movements today, driven by some interesting fundamentals. So we'll take a quick look at the fundamentals behind the movements. So we'll jump on the chart then on my demo. We'll look at the live movements to see what's happening with the technical analysis and some maybe potentially interesting entry points and exit points that go along with it. As we get going, keep in mind, as always, that all investments have risk. That is true of trading with CFDs, Forex trading, options trading, etc. No one trade is guaranteed to bring profits, but what we understand is each and every trade brings with it the potential for nice profits, which is why we're all here. So the idea is from an educational perspective, as we go through the webinar, not to be taken as financial advisement, but from an educational perspective, we're going to look at some information, some strategies, some ideas that hopefully will improve upon your win percentage, your payout percentage, etc., as you develop and improve upon your trading strategies. So some of you I know are new to trading, maybe don't even have a live account with us yet. Others I know are veterans, just looking for some tips and some new ideas. So I think we can handle all levels within the session. We talk basic enough that you should all understand, but also introspective enough that even experienced traders can gain something from our sessions. So welcome to everybody as we get going. As long as we're talking about risk, keep in mind that there's more than one way to manage your risk. You know, some use stop loss settings on their trades, which a lot of times might be a good idea to do to limit the potential for loss. There are other ways to manage risk, maybe set up hedge positions with pending sell stop or buy stop orders to open trades in the opposite direction if things go wrong, to kind of cover your risk that way. And with AvaTrade specifically, we've got a unique way to manage risk with our web trader platform and the AvaTrade Go mobile app, both of which can trade on your MT4 and MT5 accounts. We've got a feature called AvaProtect that if you open trades through those platforms or through that app, you can add protection against loss to your trades as you open them. And so for defined time periods, you're protected against any loss during those time periods for a small premium cost. And I'll show an example of how you would use that. So a unique way to manage risk, which is nice. As we move forward, we're going to talk about the technical analysis from a manual method, meaning we'll look at the price levels, draw lines manually on the chart that represent what we might call support levels, resistance levels, maybe trend lines, maybe ranging movements. We'll identify these manually on the charts. And I think it's important that you understand how to do that manually rather than just relying on indicators, which is another way to do technical analysis. It's okay to use indicators. Maybe you're using, Fibonacci levels or the RSI, the stochastic indicator, Bollinger Bands, etc. There are literally hundreds and hundreds of indicators that can help you with your technical analysis. But an indicator is only as good as it's programmed. And it's programmed based on the movements on the charts to look back at them and decide about things, just like you should be able to do manually. Okay, and the good thing about manual methods of technical analysis would be you can understand the fundamental news as it exists right now, and the indicator cannot. The indicator doesn't know that there are headlines about a second wave of virus in the European Union. So the indicator doesn't know that when maybe the DAX drops a certain amount, the indicator's telling you, oh, it's oversold, it should go up. Whereas your manual technical analysis is saying, well, I understand that there's fears about a second wave and volatility's up and fear is up. So maybe you don't act on those buy signals that the indicator's telling you to buy. And you know, fundamentally, maybe it's not a good idea, that you would wait for it to break the support level and sell rather than banking on a bounce up off the support. So it's just an example of where manual methods of technical analysis combined with the fundamental news as you know it now, many times can do better than just relying on the indicators, okay? So we'll go over those concepts and those ideas today as well. Yes, Brett, we'll go over an idea of gapping, and we'll use oil as a great example of a gap and how to trade the gap, okay? Thank you for reminding me. So, and if you have another asset that you see a large gap on, let me know. We can take a look at that as well. I have one person saying they don't have audio. Ken, check your audio. All good for everyone but you. Okay, so we let Ken know it's just him. All right, so let's go ahead. And if you have questions, you want to give input, please do that as we go along. It's really helpful for everybody when you share your ideas, your questions. Sometimes people don't know the right questions to ask, but when someone else asks it, they were thinking the same thing and it helped them out. Okay, so I always like to do this before we do the technical analysis. We take a quick look at the fundamentals, right? So what do we see with the fundamentals right now? Would you say positive momentum on the markets or negative? If we just look at this snapshot right here where I'm pointing, we see the futures are red, meaning dropping, right? The futures are dropping. Yesterday's market was green, but that's not open yet. So those are still green from yesterday. Those are not moving. What's moving now are the futures, and they're dropping, right? They're red. And the VIX index, which is referred to as the fear index, the volatility index, is up. So if fear is up and the futures are dropping, what does that tell you about sentiment right now? Positive sentiment or negative? Futures are dropping and in the red. The fear index is up. I'm with you, Thomas, or Sabin. I'm not sure which is your first or last name. It's negative sentiment right now. There's negative sentiment. And you can see the headline that's helping to drive that negative sentiment. You know, fear is up. The futures are red. They're down. Look at the headline. European shares fall on second virus wave fears. Okay? That's what's on people's mind right now, a second virus wave. And yes, Pfizer has a vaccine that's 90% effective, but I'd say there's 90% of the people in the world that aren't going to get the vaccine anytime soon, right? The doses have to be created, they have to be distributed. We're talking millions and millions and tens of millions of doses that need created, and a distribution system needs to pass them out, and people need to receive it before that takes real effect on the economy. So the excitement that occurred a couple days ago with the markets going through the roof and gold plunging $100 per ounce, that might have been an overreaction, right? An emotional reaction. So the question is, with this fear, what's going to happen? And we can see the sentiment now before the US market opens. We can see the futures are dropping, the fear is up, and the US dollar is dropping in strength. Okay. Yeah, not all the safe haven assets move right away. Someone's pointing out that the Japanese yen doesn't seem to be strengthening a ton right now, which means maybe it's a good entry point, technically speaking, right? If there's fear, maybe when the US market opened, that fear could surge. And if the yen hasn't strengthened yet, maybe you go with the yen to pull down the pound or something, or the euro, because maybe the yen didn't strengthen yet. You can catch a high point near a resistance level, and we'll take a look at the charts and see if that's possible. Now we're thinking about combining the fundamentals with proper technical advantageous entry points, right? Okay, so thank you for pointing that out, that the yen doesn't seem to be so strong yet. That could be opportunistic, right? So European shares fall at second virus wave fear. So we understand why the fear is up, why the futures are red. We have a justification for it. It's not random. We go to the next headline or the next information. We see look at out of Great Britain, GDP growth lower than expected. GDP month over month lower than expected, barely over 1% growth. You guys, you all probably saw the GDP out of the U.S. The U.S. didn't lock down their economy as much for as long. They opened quicker, and the GDP like broke huge records, over 33% GDP growth with the last numbers that came out, right? Exceeded expectations. Here we see the opposite, not meeting expectations for GDP growth, quarter over quarter, month over month, missing expectations. That's bad news, right? Year over year, still down 9.6%. We all understand it's the pandemic. We understand why there's such a big percent gain, but it wasn't as big as expected. And we understand why it's still down for the year, but these are not good news numbers. And those are the high level announcements, 3 stars. Okay, the 1-star announcements were better than expected, but those have less effect compared to the 3-star announcements, right? And we see more down here, manufacturing production, anemic, 0.2% increase month over month. For this all affects the Great Britain pound. It's what we're looking at here, okay? And then if we go down further, we look at European Union, positive numbers. Trade balance, better than expected, but still not good, right? Better than expected, but not good. And this announcement's a low-level one, not such a big deal. So we just had more announcements come in. Industrial production down instead of up. It was expected to go up in the European Union. It's down 0.4% to the negative. That's bad. Trying to come out of a pandemic and industrial production continues to drop month to month compared to the prior month. That's bad. Down 6.8% year to year and down month to month. So we're looking at negative news right now on the euro and the pound. So if they're at a high point against the yen right now, and we know there's fear on the market, which should cause the yen to strengthen, if you can catch a high point on euro JPY, GBP JPY, boy, that might be advantageous for a shorting opportunity. Okay, so we can already think about what we might like to find, technically speaking, before we look at the technical analysis. Okay, so we can look at another headline, Eurozone industry output unexpectedly slips. We just looked at those numbers. Now, I mentioned AvaProtect. I mentioned our web trader platform, the AvaTrade Go mobile app. If you, on your mobile device, come to our website, go to the trading platforms tab, click on AvaTrade Go, you're going to see you can download the app from the Apple App Store, from the Google Play App Store, and you'll have features like AvaProtect to put protection against losses for small premium costs for defined time periods, whether it's by the hour if you're a scalper, by the day if you're a longer term trader. You can protect against any and all losses during those time periods for a premium cost. The premium's paid up front. If you profit on the trade, you still paid the premium. So your profit is, if you profit $1,000, if you paid $50 for the coverage, okay, the net gain is $950 because you paid some in the beginning for the premium cost. But if you lose $5,000 on the trade during the covered time period, you get it all back. It's added back when the coverage ends. Yeah, the Guardian Angel feature, Marius, I agree, is also helpful. It gives you feedback about your own personal trading activities, gives you suggestions and information. So Guardian Angel is nice as well. Another thing about risk management with the AvaTrade Go mobile app and the web trader platform is when you program a take profit or a stop loss, it tells you how much you're risking to your stop loss and it converts it to your account currency. I'll show you how that works on the web trader here in a moment. Same on the app. It calculates your potential profit into your account currency based on the trade size you pick up here and the price you put for your stop loss or take profit. And also, when you put your trade size, it tells you your margin requirement. Before you open the trade, you have all of this information. I'm not sure I understand your question, Hyacinth. You're talking a little bit about traders are against brokers, market makers. I think there's some confusion about how brokers operate. That maybe people think brokers make a profit when traders lose, and so we're hoping you lose, that sort of thing. It's really not the way it works at all. The business model of retail brokers, at least legitimate ones that are regulated and licensed, like AvaTrade, we make a profit on the spreads. There's a small spread difference between buy and sell. At any moment you're buying, someone else is selling, right? We're guaranteed a small profit on the spread then, no matter who wins or loses, right? And if more people are in one direction than another, we hedge with outside liquidity. So we have zero risk. We don't have any benefit whether you lose or win. And actually we have I'll take that back. We have a benefit if you win, because the more you win, the more you grow your account, the more you trade. We can keep hedging with outside liquidity if we need to, and we keep making profit off of your spreads. So that's the idea. We want to keep you happy, educated, and growing your accounts because AvaTrade is a hybrid broker. We'll take trades in-house, match them with internal communication network. If we can't match internal trades to balance risk, then we hedge with outside liquidity. This is the way it works with legitimate brokers, okay? And so this AvaProtect feature, in no way are we hoping you lose or we benefit with some trick or something. It doesn't work that way. We make our money on volume of trading. We want as much volume as possible, and the more you profit, the more volume there will be. And so that's the way it works. And by the way, your account managers work the same way. You know, their bonus is the better you do, the better your account manager does. They want you to be responsible, to not blow your account, to grow your balance, and to be successful. And we do the best we can with education and support at AvaTrade to try and help that happen, obviously with no guarantees. So if you log in from our main website here, if you log in, okay, you enter this platform, okay? This trades right over top your MT4 and MT5 accounts, okay? The MT4, MT5 account, if you open trades here, they show up when you log in on the MT4 app or downloaded platform or web trader. It's all the same account. You can manage the trades in both places, in multiple places. It's the same trades, okay? The advantage of trading from here instead of the MT4 is, let me show you. Let's say I'm going to trade on gold. Okay, let me bring up gold in the search. And by the way, the search feature is more friendly here than in the MT4 as well. Now let's say I want to buy on gold or sell, whatever the case may be. Here's my AvaProtect. Let's say I want 10 ounces. So, okay, I'm going to trade 10 ounces of gold. Let me put my stop loss at, let's see, it's at 1871. Let's say I put my stop loss $10 per ounce down. So I say 1860 or so, 61. Whoops, I have to be on the right side of the decimal. Okay, 1861, and I say, okay, if my stop loss is $10 down, I have 10 ounces, I'm risking $109 if I buy right now to my stop loss. You see how it calculates for you? And maybe I say, whoa, that's 5% of my 2,000 balance. I don't want to risk 5%. And I say, okay, let me lower the trade size to 8 ounces. And now I say, okay, now it's $87 I'm risking to my stop loss. It immediately adjusted. So when you get to the amount that you say, oh, okay, 5 ounces, I'm risking only 55. Okay, that's a much smaller percent of my balance, and say, okay, that's what I wanted to risk. Now I can buy. I know exactly what I'm risking to my stop loss. I could calculate my take profit as well. If I want to take profit at, I don't know, 1880. Let me get on the right side of the decimal here. Again, 1880. Now I'm making 43. I say, no, I want to go more than that. I want to go to 1900. Okay. 1900. There we are. So now I can say, oh, I'm risking 53, to make 143, almost 3-to-1 ratio, right? And maybe I like that risk management and I say buy, okay? It really helps me understand my risk, my potential reward to the price levels I'm looking at before I open the trade. It's acting as a trade calculator in the order window. The MT4 platform doesn't do that, okay? Now, I don't mean to knock the MT4 platform. It's very nice. The MT5 platform is very nice as well for charting. I think the charting is phenomenal on the MetaTrader platforms. So that's what we're going to look at soon to do our technical analysis is the MetaTrader 4 platform as well. So what's great with AvaTrade is you have the option for both, okay? Each has its added value, the platform types that you can trade on, and you're still trading on the same account. So I could open a trade here and it would show up on my MT4. Okay, so Mubarak, let's take a look, as you're suggesting, at AvaProtect. Let's say, you know what, I don't want to use a stop loss yet. Because what happens if it goes down, hits my stop loss, then it goes the right way. I wake up the next day and I say, oh, gold went through the roof. Where's my profit? And I look and I say, oh, it went down and hit my stop loss overnight. It closed before it went the right way. And so you say, how do I avoid that? Well, why not put AvaProtect? Let's do 1-day protection. So now I can go to sleep. It's protected until the next day expires at, it gives you the exact time, 1700. Now I don't need the stop loss. I can wake up tomorrow before the protection expires. And if it spiked down $20, $10 past where I was going to put my stop loss, then it went the right way and went through the roof. And I'm in the trade still. And I never had to risk more than the cost of the premium, $49 for 1-day coverage on 5 ounces. So I still have my potential profit of 140 to my take profit price. I'm risking only the cost of the premium at this point for that 1 day. After the protection ends, then I could add a stop loss if I need to, right? So very nice feature. Any questions on that? It's available on gold, silver, and FX pairings currently. We're hoping to add more that the protection will be available on, but for now it's gold, silver, and FX pairings. Okay, so let me close this. And by the way, what if you wanted to do fundamental analysis from the WebTrader platform? You know how I pulled up articles, right? Exactly. You could go without a stop loss while it's on AvaProtect, or you could put a stop loss. Imagine you put a stop loss $20 down. During your covered time period, it drops, it hits your stop loss. You get paid that whole negative. When that trade closes, if it hit your stop loss during the coverage, whatever the negative floating was gets paid into your balance. You could reopen them from that low price. You could take the payment, then reopen. Instead of letting it go back up, you could take the payment, then reopen. Then it only needs to go back up halfway, and you're still in profit overall. So a lot of different ways you can use the AvaProtect feature as part of your strategies. Okay, so fundamental analysis can be done right from the platform on the live account only. Those of you on demo accounts still, get a live account. Even if you're just funding the minimum balance, get a live account so that you can check out all the features completely that we offer. Trading Central is a premium service. It costs AvaTrade money to give you Trading Central. So it's not available on the demo accounts, but if you open a live account, look what you can have. I mean, I can pull up my own signals, analyst views. These are live signals. This is what's happening now. They're showing where they think the movement will go. They explain why, the price levels, entries, exits, everything, where the support and resistance levels are, okay? For whatever asset you might be interested in, there they are. It's in the Trading Central. We can look at the fundamental news, okay? Let's look at market buzz. Takes a moment to load because there's so much information. Here's Pfizer. You want to know the latest fundamental news on Pfizer? Click on the bubble. Here's the articles. This is the most recent news that came out today. You want to read that article? There it is. There's the headline. You want to see the whole article? Click on it. It takes you to the website. Okay? So some fear growing that poorer countries won't get the vaccine, kind of building into what we're talking about with the second wave, and there's still fears, okay? Immediate information is important. You can find it fast through the web trader in terms of fundamental news and technical analysis. It's right here at your fingertips, okay? So the bigger the bubble in this section, the more it's being traded on or talked about in the news. Microsoft, Google, Amazon. Why were the tech stocks selling off? We could read about it right away. They were selling off yesterday because, and the day before, even when the markets were rising, the NASDAQ was dropping some because the tech stocks that benefited from the pandemic no longer will have that advantage if there's a vaccine, right? Okay, good. I'm glad you'll get a live account going. Like I said, it's you could put the minimum balance. If you don't like things, you can withdraw your minimum balance. You don't have to trade. But if you get the live account going, you can check out all the features and really get a full idea of what's happening. Okay, so all right, let's jump on the charts then. We understand the fundamental news now. So let's jump on my demo. These are the live movements. You could be trading on your live accounts, whatever you want to do. If you understand the information and you think there's something you want to trade on. By the way, we talked about the New Zealand dollar having big news coming the other day. We talked about preparing, this was Tuesday. We talked about preparing pending orders because they had interest rate decision, all kinds of stuff. Look what would have happened on your buy stop had you prepared a pending order after our last webinar. Look what happened. It broke the resistance, up it went. A simple buy stop pending order would have paid well, and then it leveled off up here. Okay, now we've got a ranging movement. But when you look at the fundamental news coming, and we understood there were major announcements coming out of New Zealand, look what happened. We prepared a sell stop down here, a buy stop up here. It broke through. You didn't even have to be awake to watch what the news was. There it went. Your buy stop pending order would have been triggered, and there you are in the money. Okay, so very easy. That was just by looking at the economic calendar, right? Economic calendars found someplace like this, or in the web trader. The economic calendar is there as well. But this is the economic calendar. All we did was look and say, oh, look, later tonight there's announcements on New Zealand dollar. We saw it. We looked at the chart. We said, prepare buy stop here, sell stop here. If there's really big news, it'll break through one way or the other, and then you ride the wave with the momentum from that direction. So it was a very simple strategy, worked very well. If we take a look at, let's say, Euro JPY right now, there was bad news out of the European Union. There was bad news out of Great Britain. So if we look at this, we say, wow, look at this resistance level. Look at the technical analysis. And if those of you that don't know what a resistance level is, it's a price line where the price tries to go above it and can't and drops back down. It goes up, hits that price, drops back down. Okay? So this is resistance right here. That's a line where the price hits, drops. It hits, drops. It tests it, it drops. It hits, it's dropping again. So if we say, okay, there was bad fundamental news for the European Union today. We just looked at the fundamental news. It wasn't good. So let's say I'm going to go take a trade, and you take a trade size that's right for you based on your balance. And if you use the web trader, you can see exactly the risk before you place it. So let's say I'm selling on Euro JPY. Okay, I took a sell. Where would I put my stop loss here? And Sabin, you're asking how to place the support and resistance. You click here. There's a tool, draw a horizontal line. You see that? I click on that. And now when I come to the chart, you see there's a little line, plus sign. Wherever I put that plus sign and draw my line, that's where I click, it draws the line for me. So I did the same thing here. So this is the resistance where it's having trouble going above and it's dropping. This looks like a spot where if it does drop, I might take my profit just before this price, because the last time it hit this price, it bounced back up. Okay, so I might go back in and put my stop loss just above this resistance up here. Okay, if it breaks through and comes up here, then the news wasn't so bad for the euro. If it breaks above this price level, then maybe I'll get out and admit I'm wrong, right? There's the possibility we could be wrong. So if it comes up, breaks this resistance and comes up here, I'll give up. So my stop loss I'll put up here. My take profit, I'm expecting if it really is bad news for the euro, it should come down at least to the next support level down around here, okay? So I might take profit around 123.91, okay? So let me go back in and I'm going to add my stop loss and take profits based on the technical analysis we're looking at. So my stop loss, I'm going to say 124.77. 124.77. And my take profit before this support level down here, 123.90. Okay, there we are. Okay, so now I'm in on a move. Yeah, right now the euro looks like it's been strong. It's been climbing, but there's fear on the markets, right? There's fear on the markets. What usually happens to the yen when there's fear on the markets? What usually happens with the yen, the Japanese yen, when there's fear on the markets? The Japanese yen is a safe haven like gold. When there's a lot of fear, usually safe havens get stronger. So if we understand that we expect maybe the yen has a fundamental reason to strengthen right now, and we looked at the negative announcements out of the European Union, worse than expected economic announcements, the euro has reason to weaken right now. So what you might call this entry point where the euro went up against the yen, you might say it's an advantageous entry point to short the euro against the yen because the fundamental news says the euro should weaken and the yen should strengthen. Type OK if you're with me on that. If you understand the concept. Using the fundamental news to determine the preferred direction you'd like to trade with a pair of assets, and then hoping to find an advantageous entry point, technically speaking. Okay, good. It looks like most of you are with me. And so we've got momentum here for the yen to strengthen right now, for the euro to weaken. And look, it already overcame the spread, right? It's trying to go our way. So we can let that run. What about the pound against the yen? Wasn't it the same thing? Great Britain had some really bad numbers that just came out. Okay. Also, the pound tried to climb and found resistance, right? Here's the resistance. The pound dropped. It tried to come up, found resistance, dropped. Found resistance, dropped. Found resistance, dropped. So we could be selling on GBP, JPY, the same as we're selling on Euro, JPY for the same reasoning. Okay. And maybe you diversify. Maybe I could have put half a lot on Euro JPY sell and half a lot on GBP JPY sell. Maybe that would suit you better to diversify. It's always a nice thing to diversify on things. So, but you understand the technical analysis and the fundamental together many times makes it a more powerful move. Now, we talked about looking at a gap and factoring in a gap on the chart to our trading. So let's look at oil. Let's look at crude oil. And this is very interesting to look at. So if we go to 1-day candles on crude oil, okay, 1 week candles on crude oil, and we look back in time, what we can find, and maybe I need to go to 1 day to see the gap. Let me zoom out a little. There it is. Okay, here's our gap. Type yes if you see this gap I'm pointing at. That's what we call a gap, where there's a break in the price. There's a break in the price. Okay? If you all were paying attention back before this pandemic, there was an oversupply of oil crisis that was occurring. Anyways, before the pandemic, there was an oversupply of oil crisis, and Russia and the OPEC nations were in a pricing war. OPEC had cut production to try and drive the price back up to lower the supply, and Russia said, no, we're not going to do that. And then OPEC said, okay, then we're going to up production. And that's what they did. And what happened along with the pandemic, over a weekend, from Friday's close to Sunday night's open, there was so much fear about oversupply and then fears about this pandemic, the price gapped down. Okay, a huge amount. So there's no support or resistance here anymore, right? So if we drew a line at the bottom of this gap here, and we drew a line at the top of the gap here, that's an important price level, okay? And give or take a small amount, okay? Top of the gap, bottom of the gap. Look what has happened since then. When this movement, hello, Natalie from Russia. And please don't take offense when I say Russia didn't want to cut production. That is their right to do what economically is right for Russia's economy. Okay, so what we see here is when the movement got back near the top of the gap, okay? When you trade the gap, you're waiting for a movement to get near one of the gap price levels, and that acts as resistance here. This would be resistance. If you break into the gap, then there's no resistance typically between that price level and the top of the gap. So let's watch what happened. We traded, and keep in mind these are one-day candles. As this movement reached the bottom of the gap, as the oil price recovered, we were saying sell once it reached the bottom of the gap. So this was climbing. Look what happened on this one-day candle. It reached the gap and it dropped, right? And these are one-day candles, so that was a big drop. If you had sell limit orders waiting to sell when it hit the bottom of that gap, boom, it dropped. It hit the bottom of the gap again, boom, it dropped. You see the big red candles. It dropped as soon as it reached the gap dramatically. At the same time, you have buy stop orders up here, pending orders waiting that if it breaks into the gap, once it breaks into the gap, there's no more resistance until it reaches the top of the gap. That's also part of the trade the gap strategy. Sell when it reaches the bottom of the gap, which you'd have won once, twice, big payouts. Once it reached the bottom of the gap here, if you were selling, it broke through, you'd have lost once. So on selling from this price level, you would have won 2 out of 3. Once it entered the gap, your buy stop is triggered, and it went all the way to the top of the gap. So that's a winner on the first buy stop. It enters the gap here, and it climbed all the way up and filled the gap, it's called, filling the gap. Once it reached the top of the gap, what kind of pending order would sell from the top of the gap? And look what happened. When it reached the top of the gap, you sell. That's how you trade the gap. That's the next resistance level. It reaches the top of the gap and it dropped. So a sell limit pending order to sell from the top of the gap. Look how many times it would have worked. Top of the gap, sell. Bottom of the gap, buy. Top of the gap, sell. It didn't reach the bottom, but look how many winners. It breaks into the gap, that's a buy signal. Take your profit at the top of the gap, winner. Sell when it hits the top of the gap, it comes back down, winner. Buy when it hits the bottom of the gap, it comes back up, winner. Sell when it hits the top of the gap, it comes back down halfway. Once it started hesitating and moving sideways, you could have taken your profit, another winner. Now it hesitated, right? It hit and dropped. There's another winner. It hesitated, broke through, there's a loser. Okay? It came back down once it re-entered the gap, sell, winner. Okay? This is what it is called trading the gap. Look at the most recent movements. Once it broke into the gap here, Georgios, yeah, the power of this, when you back away and look at one-day candles, it's amazing. Now you understand why, if we look at the 1-hour candles right now, why is it acting like it is at this price level? It's because it's the top of the gap. It's on the top of the gap right now. Look, it's right on that price level. Why do you think it's hesitating now? Look at the hesitation. Hesitation, hesitation, hesitation. So over the last week, as this came up on the 1-day candles. You bought from the bottom of the gap. Look at it come up. This is where you take your profit. The top of the gap, that's the resistance. Look, it's hesitating. Once it breaks above this gap, this is your signal to buy. If it breaks up here, now it broke through the top of this gap. The next resistance level's up here, right around $48 a barrel. So if it breaks this gap and hits up here like around 41.5, you could see a large run up to the next resistance level up here. Okay, so this is what we call ranging. It's ranging between the top of the gap and the bottom of the gap, up and down, up and down. Then it hesitates, breaks through, drops, up and down between the gaps, up, all the way down, all the way back up. Eventually it'll break through and it could make a run to the next level. So trading the gap is trading if it reaches near the gap, below it, trade down. If it breaks into the gap, trade up. If it gets to the top of the gap, trade down. If it breaks through the top of the gap, buy. Okay, that's this example. Look how many times it would have worked. And no, it's not going to work every time. No trade is guaranteed, but that's not what trading is about. Trading is about potential, the potential to profit. And how often will you be right compared to how often you're wrong? And you can see here, you'd have been right a heck of a lot more times than you were wrong, as long as you take a trade size that's small enough that your stop loss can be far enough away that you can take advantage of these reversals without the little wicks that went past a little bit before it went the right way. You don't want to get stopped out with those little distances past that price level. That little wick at the top of this candle, you don't want that to stop you out before the bigger move back down. So you've got to have a small enough trade with your stop loss far enough that you can stay with it until you're assured that it broke through those price levels and went the wrong way. Okay, so very powerful example here with oil. And if we go back and look at Euro JPY, what's happening with our Euro JPY? Okay, let's go to 5-minute candles. Look what's happening. Our resistance level is holding up here. It's dropping now further our way. We've moved into profit. Why is the euro dropping against the yen? We already knew before we opened the trade. We looked at the fundamentals. We understood the fear index is up almost 2% now. The futures are red. Why wouldn't the yen strengthen? We looked at the fundamentals out of the European Union and we said, wow, there have been some negative numbers that came out. Look at the industrial production, negative, trying to come out of a pandemic, and their production this month is less than last month. This is really bad news. Okay, so why did the euro go up prior to the current drop that we maybe expect? Because there were a couple good numbers out of the European Union right here, but they were low-level announcements. Okay, this is a bigger deal, industrial production being negative. So then we say, okay, we expect the euro to drop then. And then maybe we like our technical entry point. Resistance, 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 downtrend. Okay, and when we looked at it on bigger candles, 1-hour candles, we see that's a pretty significant resistance here. It's not just on the 5-minute, it's also over here on the 1-hour candles. We see more resistance here. Okay, so this drop could accelerate. It could speed up as we look at the 1-minute candles. Okay, 15-minute, 5-minute, etc. All right, any questions before we end things? Sabin, to find support and resistance, you look for reversal points where it hits, where the price hits and goes up, or hits and drops. So here's resistance. It hit here and dropped. It hit here and dropped. It hit here and dropped. There's resistance here. There's resistance to the price going higher. So if you sell, you might put your stop loss above that resistance, thinking if it breaks through there, then something changed. All right, I'm glad the explanation's clear and everybody's happy with it. I have one request I'll get to now, the dollar index, before we move out of before we have to end the webinar. We're almost an hour in. Dollar index. Listen, the US dollar lately has been strengthening when there's fear on the market. As a currency paired against the euro, the pound, other currencies, and we know the euro and pound have reason to weaken right now. We just looked at the fundamentals. So what might the dollar index, which is a basket of pairings, euro USD, GBP USD, USD Swiss franc, etc., what might happen here with the USD? It might strengthen against those currencies. So if the USD is viewed somewhat as a safe haven, maybe to hedge this euro JPY sell, you also then take a look at the dollar index and maybe expect it to rise, okay? And you don't have to guess whether it will rise. Look at this resistance level. Resistance, resistance, resistance. If the US dollar index is indeed going to strengthen right now, okay? DIMOC, there's no simple method to find gaps. You have to look at the charts. And usually you'll see them from Friday to Sunday. So I would say go to 1-day candles and look for the gaps then. And I called you DIMOC, I think your first name, Brett. First name is Brett. So you can look at the 1-day candles and you can see gaps then through the weekend, from Friday to Sunday. Easy way to find gaps, I guess. So if the dollar index is going to strengthen, shouldn't it have enough momentum to break this resistance on the 1-minute candles? So you could put a pending order up here. If the dollar index hits 92.85, then buy, right? So couldn't I get in and say pending order, buy stop, buys from a higher point? If the dollar indeed is going to strengthen, it should hit 92, let's say 86. If it hits 92.86, then I want to buy. Okay, so there, I have a pending order waiting. I don't need to guess if the dollar will strengthen. Let's wait for a breakthrough. If it breaks this little resistance on the 1-minute candles, then I'm in on a buy. And obviously you'd want to put a stop loss then maybe back down here, because if it's a true breakthrough, it should keep running. If it breaks through and comes back down below this resistance, then you'd say, oh, it's a false breakthrough and you have your stop loss down here, okay? Look at the way the Euro JPY is accelerating. You know, if you're a scalper, you already take your profit. There's my $20, okay? Very simple. Now we expect maybe the dollar index to strengthen. We've got a pending order here. I could put my stop loss back down here, my take profit up here at the next resistance level. Okay, maybe I'll do that. Let's put modify. Let me put my stop loss down here, 92.80, 92.8. Okay, my take profit up here around 92.92. 92.92. 92.92. Okay. Sounds good. I need to be a little further away from my stop loss and take profit. Let's do 92.7. It has to be a far enough distance away. Let me see here. Let me just take this down a little bit. 92.5. Let's go maybe 93. Let's just get this far enough that we can get it, and then we can slide the stop loss and take profit. Here, we'll do this. 1 second. One second, I apologize. Let's get this far enough away. I think it's frozen on me. That's all. It froze up. So anyways, you'd go back in, add your stop loss and take profit. I don't want to hold you up with the technicalities here. Add your stop loss and take profit. Make sure it's the correct number of points away. It only needs to be 20 points away, and all would be good. And this might be a nice pending order. The buy stop on the dollar index. Just get your stop loss somewhere down here, take profit somewhere up here, and it'll be interesting to see how that plays out. And if I need to put my stop loss further away, then that's what I do. Let me just say 90, 89, and 95. And if I wanted then to do my stop loss, I can add it in there at the proper distance. So thank you for attending. Yeah, the price is wrong. I can see what I was typing. It's no problem. So any questions before we end things? The concepts we've gone over, anything that we've been covering? All right, thank you all for the comments and the kind words. I appreciate that you've enjoyed the webinar. Conroy, what's your question about gaps before we end things? Yeah, it's easy to find gaps because you tend to have gaps through the weekends. So if you're on one-day candles, you look from Friday's close to the next week's open on Sunday night, Monday morning, and you can get to it. What's your question? Okachuk Wu, what's your question? You're saying I didn't answer? Let's try and get it answered. Herb, you're very much welcome. What's the best time frame for analysis? It depends what you're doing. We've demonstrated that one-day candles is a good time frame for finding gaps. We also demonstrated that 5-minute candles was a good time frame to find a resistance level for the Euro JPY that was about to reverse. So that's a good question, and the answer is it depends on if you're doing short-term moves, long-term moves, etc. There's no one correct time frame. All right, everybody, thank you very much. Bye for now, and the next webinar will be next Tuesday. Okay.